So sometimes I record videos, and when I record those videos, I'm not that super excited to record them, but let me be very, very clear. This video I'm about to record here, I'm extremely excited to record. I don't need to flip your flapjacks. I don't need a holy smokers ain't no joke as you today, okay? This is a video where I'm going to give some points of view that I don't think I've ever given in regards to stocks in my 5+ years of being on YouTube. And that excites me, and that's why I'm excited to do this video here today, because a lot of what I preach on my YouTube channels is kind of the same stuff all the time, right? Long-term investing, look at the balance sheets, think about where the company's going over time, future growth rates, things like that, right? But today in this video, I'm going to give a framework of thinking about stocks that's just so much different than really anything I've really ever taught on my YouTube channels. And as somebody that's been doing this for a long, long time, I obviously have an immense amount of stuff I can give for value out there, right? And so we're talking about Tesla stock here today because I've been having some thoughts about potentially cashing out some of my shares in January. I was even talking with a friend tonight about it. Hey, I might, cash some Tesla in January if the stock continues to run. And it led me to think, well, is that a smart decision, right? And there's a good saying called, no one ever went broke taking a profit, right? But on the flip side, you can miss a lot of money taking a profit, right? And so in relation to this video, I want to talk a little bit about Tesla numbers. And I want to explain why Tesla stock might not be as crazy, quote unquote, overvalued as a lot of folks like to say right now, okay? And we're going to get into kind of some frameworks on how I think about things, because people are looking at this company valued at 1.2, 1.3 trillion, right? They're looking at a lot of folks like us that have gotten some ridiculous gains in the stock over the past several years, and they're saying, this is crazy. Like, this stock has to be overvalued, right? It has to be a ripoff, right? And let's talk about that. So I hope you guys enjoy this video as always. All I ask in return is that you smash that like button. That's literally it, guys. Let me know you enjoy a video like this where we're talking about a direct stock like Tesla, but I'm also just giving game out there in value from, my a million years of being, doing this in the stock market, okay? So in relation to Tesla, first off, I have them at a $1.3 trillion market cap. Right now, it's actually, I think, technically, as of recording this, I think it's 1.2 trillion or 1.23 trillion, something like that, right? But let's just assume for a moment the stock continues to go up to $1,300 a share. Well, at about $1,300 a share, this stock will be around a $1.3 trillion market cap, okay? Now, let's think for a moment about 2022 numbers, right? Think about this past quarter. It was 1.6 billion, if I recall, something like that, net income, right? Think about Tesla over the past several years. Went from a company losing crazy money, right? Like ridiculous, massive losses, to a company that all of a sudden now is making a billion plus net income. Wow, that's a big change, right? And so I think in 2022, they're going to do around $75 billion of revenue. On the low end, I could see them doing maybe 70, but let's say $75 billion. I don't think that's a crazy number to assume they'll do $75 billion of revenue in 2022, okay? Assuming they'll do $75 billion in 2022, it's not crazy at all to imagine this company doing $10 billion of net income. You look at the type of numbers they're putting up this year with these current revenue numbers, never mind next year, right? I don't think it's crazy to imagine this company does $10 billion of net income next year, right? Well, if we're putting a $1.3 trillion market cap on it and we're saying the company's going to do $10 billion of net income, that would put Tesla stock at a forward P of about 130, assuming they do $10 billion, right? 130. So now 130, it is a big number, right? No doubt about that. 130 forward P is a large number. But for Tesla, that is not a large number. I think you can expect for Tesla to trade anywhere between a forward P of 100 and potentially 200. Why is this? Well, we know the Tesla's starting to get margins that, were folks couldn't even fathom in the past, right? We know Tesla has multi years of growth ahead of this company, right? For so long into the future, like when does Tesla stop growing? Like no one knows when Tesla stops growing, but we know it's not anytime in this decade at least, right? So it's not crazy to slap a 100 to a 200 forward P in the stock. So if it's at 130, that's actually not crazy for Tesla stock, right? If it's Coca-Cola trading at 134p, there's an issue, right? Because those companies just don't have the same type of growth, right? Now, in 2023, I think the company can do $105 billion of revenue. Some folks look at that number, especially a lot of Tesla bulls, and think that number's probably low, but I would be a little conservative. So 105 billion 2023 revenue, right? Let's say, I don't know, interest rates go up or something, and maybe that hurts some people from buying the cars. I don't know. So let's say they do 105 billion in 2023 revenue. I don't think it's crazy to imagine this company does $20 billion of net income that year. Remember, Tesla is making unbelievable strides in their profitability right now, right? In their margins and everything across the board. So, and as far as the robo-taxi network, we don't know if that's really going to be launched, right? I feel like these cars are unbelievable machines when it comes to their autopilot programs, but as far as getting regulators to actually allow it on roads where people are picked up and things like that, it might not be launched at that time. So if it's not launched at that time, then I think you have something that's, not going to hurt the profitability of the business model, right? So I don't think it's crazy at all to imagine this company does $20 billion of net income, which would be, a little under a 20% flow through, okay? Meaning, a little under 20% of the revenue makes its way down to net income. That would put this company at about a 65 2023 forward PE. Once again, that's not too dang crazy, right? Let's say, they did 15 billion instead of 20 billion, which I think 15 billion would be a little low. I'd be a little disappointed in that, but let's say 15 billion, then you're at, maybe a 90, something like that, 2023 forward PE, looking at it from that perspective, right? Now, in 2024, I have them doing about $150 billion of revenue. Once again, some folks would feel like I'm a little low on that number. That's fine. And then doing $150 billion of revenue in 2024. Now, let's say they don't, improve their net income nearly as rapidly as, year over year, basically from 2020 to 2021, 2021 to 2022, and 2022 to 2023. Let's say, let's say there's some huge competitive pressure out there. Let's say, all the auto companies are watching their ICE vehicle sales at that time just, tank through the floor. They're desperate. They're trying to sell EVs any way possible. And so they're, giving so many discounts. And let's say, there's just a lot of competitive pressures that's causing Tesla at that time to be in a position where they have to keep price low, right? Just to keep market share. Or let's say they launch robo-taxi network at that time, and that hurts margins in the short term. So let's say they just the pace that they improve their net income goes down dramatically, right? From basically a double up to only a 50% rise when all of a sudden you add an extra, $45 billion of revenue, but you only add $10 billion of net income year over year. So let's say a scenario like that plays out, right? Well, that would still put the company at a $30 billion net income, basically looking at it from a $1.3 trillion market cap, at a 2024 PE of 43 based upon today's market cap, which once again is not crazy at all, right? And so when you start to look at all this, you start to realize, man, this is a tough thing. I'm like, the stock has gone up so much. It is very, very tempting to take some profits in the stock and deploy some of that money in other stocks that I love over the coming years. But the hardest part of this whole scenario is when you start to actually run the numbers on this, right? You start to actually do some of this, let's call it iPad work, or let's just call it, do a little, drawings on a notepad or something like that. When you start to run some numbers, these numbers aren't crazy. It's not crazy to imagine Tesla does $75 billion of revenue next year, and it's not crazy to imagine them doing $10 billion in net income. These are not crazy things. It is not crazy to imagine this company does $105 billion of revenue in 2023 and does $20 billion on the bottom line. This is not crazy, right? So these certainly are not the most bullish scenarios out there. They're just not even close to it. And so I think this is very, very, very important, okay? So that's the first element I want to talk about, is kind of running some numbers on this, okay? Now, next elements, which might even be more important, is I want to look at Apple over time. So when I got on the market in 2008, 2009, Apple was trading around $100 billion, or maybe a little under $100 billion at that time, right? This was a stock back then that it was, it was pretty wild how big the market cap was on it. And I remember seeing Apple over the coming years go to a $200 billion market cap. I remember watching Apple go to a $300 billion market cap. And I remember when Apple overtook ExxonMobil as the biggest market cap in the world. That was crazy. And for most of the people watching this video, you were not in the stock market back then, so you have no clue what I'm talking about, okay? But I can tell you that was unreal when Apple, this company selling iPhones, overtook ExxonMobil, the oil and gas giant, as the biggest market cap in the world. That was a huge deal. A huge deal. And that was something that was just like, can you believe what is going on right now? Like, Apple really just overtook ExxonMobil as the biggest market cap in the world. And I gotta say, at that time, it was a time period in which it was, it was easy to almost think like it can't get any bigger than this, right? Like, Apple can't get any like there's $300 billion, $400 billion. Like, it can't get any bigger than this. And then I watched it hit $500 billion. $500 billion, the first company I ever remember doing that. Like, absolutely insane, right? Then they go through some problems, and then they rise. And then they go through some problems, and then they hit the $1 trillion boys club. And nowadays, even after all the shares Apple's rebought over the past 5+ years, look at how many shares Apple has taken off the market in the past 5+ years. Even after they took off a ridiculous amount of shares, I think they've taken something like, I want to say like a third of the shares off the market. Fact check me for that. It's a crazy number. And the company, after they've even taken off all those shares off the market, it still trades at like a $2.5 trillion market cap, right? And so I bring this up as an example because this is the type of stuff that you just never could have thought was possible, right? Like I said, like when you witness this, and when you like myself and you participate in the market through this whole time and watched Apple grow from a company that was around $100 billion or less than $100 billion, which was still huge back then, to watch it grow into multi-hundred billions of dollars, right, in market cap, then watch it overtake ExxonMobil for the biggest market cap in the world, and watch it grow to $1 trillion for the first $1 trillion company, and then multi-trillion dollars. Guys, that is something that just most folks could not even conceive of, right? And how did Apple do that? They did it because they executed their business model, right? They continued to expand the business. And even after they lost the amazing Steve Jobs back in, 2011, even after they lost that legend, they still found a way to continue to grow this business bigger and bigger and bigger over time, right? Crazy, needless to say, right? And so when you're seeing things like Tesla play out here, just understand this is not the craziest thing that has ever happened in the stock market. One of the craziest things that have ever happened in the stock market since I've been in the stock market was watching AMD. There's a stock I remember, talking about with some folks back in the day, okay, before I was on YouTube. And I remember in 2015, this was a stock that was less than $2 a share. I think the lows for that stock back then was around $1.60 technically, okay? And so needless to say, it was under a $2 chuck stock. And what went on with AMD over the coming 5-6 years is the stock went from $1 something a share to becoming a $130 billion behemoth that went on to, take on Intel in a serious way. And here today, this company trades at $157 billion market cap, right? That's, I understand how amazing this whole Tesla story is. But you got to understand, the AMD story is even crazier. This is a more epic story. AMD was completely done and forgotten about. And now this company is arguably more respected than Intel, a company that, back 6 years ago, you couldn't even contemplate that, right? And the stock price, if this stock goes, like I said, back in 2015, I remember the stock being $1.60 specifically. If this stock hits $160 a share, that's 100x in a matter of 6-7 years, absolutely crazy, right? And so this is some more food for thought that you got to understand, epic things happen in the stock market, needless to say. Companies turn around, companies do things that you could never have even conceived of these things happening, okay? Let's talk about Mr. Amazing's on for a minute. Amazon, right? So, I remember looking into Amazon back in maybe 2011, 10, something like that. And back then, Amazon probably had a $50 billion market cap on it, $70 billion. And I even remember looking at Amazon at some point in time, right? And I used to be a Walmart shareholder back in the day, because if you know anything about my early journey, I was into a lot of safety stocks, right? Remember, I started in the Great Recession, which was the scariest time to start. So everybody was like, don't even invest in the stock market. So I was kind of like brainwashed to go to safety stocks back then, right? So I was investing in a lot of companies like Kimberly-Clark, Conagra Foods, Walmart. These were my stocks in the early days, right? And so I remember being a Walmart investor, and I remember looking at Amazon after I'd even sold out of my Walmart investment, right? And I remember looking at it, and Amazon was starting to climb to like $100 billion market cap, and it was like, this is ridiculous. Like, Walmart's trading at $200 billion or whatever it was at that time. And then you had Amazon trading at almost half its value and starting to approach Walmart's market cap, and it was like, this is ridiculous. Like, Amazon, like, they're nothing compared to Walmart. Like, this is insane. And then I remember vividly the day they covered it on CNBC, as with all these things. I remember the day Amazon overtook Walmart for market cap. I remember that day. I remember, if I recall, I was at my apartment back then, and that was just a huge deal. Amazon overtakes Walmart for biggest market cap out of those two, because people had compared them for a long time, and the fact that Amazon overtook them for market cap was a massive, massive deal. And once again, this was something you could not even fathom in the past, right? Like, Walmart is this unstoppable giant. I remember they would do documentaries on Walmart and how it was bad for small business, and how they'd run everybody out of town, and how it was a monopoly that could never be beat. And then all of a sudden, Amazon, now look at Amazon. Like, people don't even, like, it's like a joke. You can't even compare Amazon and Walmart. These companies aren't even in comparison, man. Like, Amazon's playing on Mars, and like Walmart's playing like, I don't know, under the ocean or something like that. Like, you can't even compare those two companies now, right? And so, just in my stock market journey of being in this game for 12 plus years, I've witnessed some of the most shocking stuff. And I could go into, I mean, we could make this video 6 hours long, and I'm sure some of you guys would probably enjoy that, of just going through example after stock after stock after stock of some of the craziest things you've ever seen in the stock market. And these are just some really big examples. I just pulled up Apple, Amazon, AMD. And so I bring these examples to you guys so you can understand, and you can, when you look at a stock like Tesla or any stock in the future, when it does some crazy stuff, you really got to run the numbers, and you really got to break it down, and don't just listen to what people say, and really just run numbers and try to figure out, is this crazy or does this make sense? Okay. Because sometimes you got to understand, it's not as crazy as it looks. Just because a stock price went up a ton does not mean necessarily that stock is massively overvalued or anything like that, okay? And so when it comes to me with Tesla and my decision to, if I'm going to take any profits in that stock come January, what it will come down to is really looking at where the valuation is at that time versus where I expect growth to be in the future versus where I think I would get a better return on investment, whether I think I would get it better over here or over there. That's what it will come down to. Not because it went up a lot, not because of somebody that's doesn't own the stock, that never was part of this journey, says it's overpriced, right? Because it's very easy to get jaded about these things, and if you're not part of the journey, you just like, it's so overpriced, it's ridiculous, right? It's very easy to say that, right? I can say that about Netflix. I've watched Netflix go from, now it's a perfect, another example. I remember Netflix 2011, 12-ish, sometime around then, there was, Netflix was moving to a streaming model. A lot of people disbelieved in Netflix future, and it's very easy. I never was one that participated in all those gains Netflix stock got, despite even being a customer at different points in time, right? And in regards to Netflix, that's a stock that it's very easy for me to say it's overvalued, it's a ripoff. But remember, I was never part of that journey anyway. So it's very easy for me to say that because I was never even on that train, right? So it's very easy for me to hate on it, right? Food for thought there, guys. So really hope you guys enjoyed a video like this. Hope it gave you some good insights on kind of, some things out there in the market. Appreciate you guys. As always, all I ask in return is that you smash that thumbs up button. That helps out a huge YouTube algorithm. Helps, other people see a video like this. And if you want to do it, go ahead and do it. Download the Hungry Bullets on your iOS and Android store now. A way to track your stocks, cryptos. Keep up with what's going on in the market as well as news in relation to your stocks, financials, news, earnings calls, SEC reports, all right inside the app. Much love as always and have a great day.